What I noted about Japan is I suppose the data proving out that some of the mid-cap or small-cap performance was a lot better than otherwise in terms of some of the large-cap performance. But how much of that is tied to, in your mind, just the lack of adequate price discovery when you're talking about Japan, because there's really no coverage, that you get all of these variances. So how does that dynamic play into it?
Yeah, I think that there are two things to keep in mind, and they're kind of separate. The report that we're talking about, we call SPIVA, S-P-I-V-A, stands for S&P Index versus Active. And the point of SPIVA is to ask what fraction of active managers have outperformed a benchmark that's appropriate for their investment style. So in Japan, for the first 6 months of the year, something like 90% of all large cap managers underperformed. And if you look at mid and small cap managers, more like 48 or 50% underperformed, so more or less a coin flip. My interpretation of that would be that in an environment where large cap does very well, if mid and small cap managers simply let their average capitalization drift up a little. I hate to use the word cheap, but I'll use it lovingly. So let their average cap drift up a little bit. That gives them a potential advantage, and we see that quite often in the U.S. I mean, in times when mid and small cap managers look pretty good relative to their benchmarks, are typically times when the large cap segment did really well. In fact, we saw that in the U.S. in the first 6 months. Roughly 60% of all large cap managers underperformed, but mid and small cap, the majority outperformed. The same thing happened. When you come back to the broader issue, not just in the last 6 months, but more broadly, what we typically find is that often people argue that mid and small cap stocks are a good place for active management simply because there's less coverage there. And it's certainly right, there is less coverage there. But the implication of that is that mid and small cap stocks are more likely to be undervalued. What the lack of coverage means is they're more likely to be misvalued. They're quite possibly overvalued as a class rather than undervalued. And so that's why the argument breaks down. And that's why if you look at long-term data, US, Japan, otherwise, although in short periods mid and small cap may have an advantage, especially when big cap does well, that's not true over a 5-year interval, or certainly not 10 or 20.